Assalamualaikum warahmatullahi wabarakatuh. My name is Danial Zikri bin Shukri. Today I am going to talk about working capital management. Let's move on to the definition. Working capital management involves daily decisions related to investing in current assets and how to finance them. In working capital management, there is a risk-return trade-off. With more assets in the company, the profitability will be lower but the liquidity of the assets will be higher. And with more current liabilities, the profitability will be higher but the liquidity of the assets will be lower. In some cases, company will go through a cash shortage scenario. This can lead to delays of payment to creditors and suppliers, inability to secure materials, low production level due to lack of material, less amount of finished goods, low cash flow, and eventually the company will face technical insolvency and bankruptcy. There are three types of working capital policy. The first one is relaxed. It involves in a low risk policy, resulting in low returns due to low productivity. The next one is restricted. It involves a high risk policy with higher return. Lastly, moderate working capital, where it balances between relaxed and restricted. It involves minimum current asset investments without sacrificing liquidity. Lastly, there are three working capital approaches. The first one being conservative, which has the lowest risk compared to other approaches. The second one is aggressive, which involves higher risk because it uses some of the permanent current asset. And lastly, hedging approach, which include moderate risk with moderate returns. As a conclusion, the best approach to working capital management depends on the profitability, cash flow stability, assets liquidity, management attitude towards risk, and expected future interest rates of the firm. Thank you. That is all from me.